Do we think layoffs are going to continue to happen for the foreseeable future in every sector in almost every industry? Hi, everyone. Welcome to Twin Shores bi-weekly market update, where we share what we're seeing in the traditional and digital markets. I'm Alex Kaminer, the host, with Tim Nihill, certified financial planner, and Alex Krieger, our digital markets analyst. For today's big topics, we're going to be talking about the Fed rate hike, which is so exciting, inflation, in layoffs that's happening across the board, not just in tech or finance, but in general, we're seeing a lot of layoffs happening. And what's happening with cryptocurrency, specifically in Nigeria. Why is it cost 38K to buy Bitcoin? We're going to talk about that. Of course, we hope you enjoy the content. And if you do, please like, share, subscribe, and comment down below any questions you might have. Tim, off to you.
Yeah, first and foremost, a couple of quick things. So CFP, and people probably see CDFA. If anyone out there is wondering what that is, it's a certified divorce financial analyst. So just another specialty that we do. So divorce is a topic we should probably talk a lot more about. And then I just want to give a quick shout and a plug to my friends down at Boone's Fish House and Oyster Room here in Portland, Maine. Thank you very much for the hat. It is much appreciated, especially when I woke up this morning and it was 14 degrees outside. I love Boone's. It's one of my favorite restaurants because you know how usually when you go to a new city or you go to a city and it's on the water and you have all these restaurants and they're just tourist traps, right? You walk in and you have all these great reviews, TripAdvisor, all this garbage, and you walk in and you're like, this food is just not good at all. You don't have that issue at Boone's. So anytime I want a comfortable, good experience, cocktail, oysters at a really good price, which is funny because I know the price of oysters in this area and I see the markup sometimes and I just laugh. My friend Darcy does not do that to people, and the food is fantastic, and so is the staff. So anyone out there, if you happen to be in Portland, please at least stop by and give them some business and tell them that Twin Shores Financial sent you. Anyways, we will move on to the traditional markets and what we're seeing. So as Mr. Kaminer mentioned, the Federal Reserve raised rates by 25 basis points today. Inflation, Fed, central banking, I think all this is becoming one big snooze fest. And quite frankly, it's just mind numbing now. But kind of the path and what we've been talking about and what we've been seeing in the future for the markets and economies is playing out. So I think 2023 is going to be a very, very interesting year. Ray Dalio from Bridgewater Associates, one of the biggest hedge funds in the entire world, had some recent comments that he shared, which I think are really, really good for people to listen into and read up on. His message is very similar to ours, right? And it has been. We talk about with people retirement and how the 401k, you might as well just walk into a casino and play roulette, because you're gambling with your future. And so we're just watching an entire shift from financial assets into now tangible physical assets. So you have to have diversification, right? You have to have real estate. You have to have real true income producing investments that aren't, kind of like a Fugazi and there's nothing behind the curtain. Franchises, gold, silver, commodities should play out very, very nicely this year. And all this is you have to have yourself hedged for basically what's happening is the devaluation of fiat currency across the board, right? So in Lebanon today, the value of their currency dropped by 90%, right? So say that again, 90%. So imagine waking up and saying, oh, this is worth, 100,000 today, and tomorrow it's only going to be worth 1,000.
10 grand. Yep.
I was with the 99, but fiat currency across the board, it doesn't matter if it's the euro, US dollar, the yuan, et cetera, et cetera, et cetera. This is starting to play out this year. And that's where I think the message around physical assets, yes, have exposure to equities, think about what the future is going to be and what the future of an investing is going to be and what the future technology is going to be and what the future of healthcare is going to be. Like, we really think that those sectors have massive opportunities that are really going to start to show themselves this year. And then on top of that, I think just people rethinking how they do investments in general and how they rethink about financial planning, because longevity is going to be a bigger issue than ever. Currency debasement is going to be a bigger issue than ever. We know that we're going to see central bank digital currencies, which, Alex Krieger, you could talk about. And then on top of that, it's just, continue to go about your day and day and do what you do. So outside of that, the biggest news this week was just, hey, the Fed, instead of raising rates 50 basis points, they raised them 25. The equity markets or the computers like that. So obviously the market's got a little bit of a bump today, but we're seeing across the board, I think there's a tremendous opportunity that's really starting to present itself, and it's going to happen in the tangible assets. It's going to happen in the Internet of Things. It's going to happen in the future of technology, the future of healthcare, and obviously digital assets and cryptocurrencies. So that's kind of the update from the past couple of weeks. Outside of that, we're just going to let what's playing out, let it keep playing out. And then probably Alex Cameron, you've been talking a lot about this recently. I mean, we're seeing a lot of new layoffs being announced by big companies. So I think this is going to really start to present some problems for investors and for people in the United States.
Yeah, I was just gonna bring that up. What are we thinking with these layoffs? I mean, they've been continuing for like the last 6 months. It's just been a gradual flow of people getting laid off, and it seems like it's picking up a little bit more now. And it's not just in the tech and finance industry, but all across the board.
Yeah.
So, what are your thoughts on that?
I think we're going to keep seeing it from the financial news and kind of the word on the street. If you're looking at all the large companies and they're doing their quarterly calls to investors and to board members and all that good stuff, headcount is at the top of the list. Cutting headcount, trimming the fat, if you will, getting thin. That's really where the focus seems to be these days. And then sometimes it's just simple observation, right? So I went to McDonald's the other day just to grab, a soda because it costs $1 there, which is fantastic. And the woman behind the window, she doesn't even pour the sodas anymore, right? So you have the soda machine, and then you have these little cup areas, and then all she does is she takes the size of the cup, puts it in the container, and the thing cycles around and pours the ice, and it could be soda, iced tea, lemonade, et cetera, but literally the machine is doing the job for her.
Something interesting that I learned recently is that in Fort Worth, Texas, there's now a fully automated or largely automated McDonald's. There's almost nobody working there except to probably upkeep the machines. And you order it on a screen, or you go to the drive-through and you tell an AI, this is what I want. And you pull up and a machine claw just brings you your food.
I think artificial intelligence is starting to rear its head. I think GPT, it passed some sort of big medical test or some scholastic university test and got a B+ on it. I actually saw a video where there was a military guy who was training, like this, face to face with an artificial intelligence or a robot that had a gun, right? And it was teaching the robot how to use military techniques in combat.
Scary stuff.
So it's almost like part Terminator.
I mean, it's been clear that blue collar jobs are probably going to be hurt a lot with AI technology and more automated technology. But like you just said, with this military robot, both white collar and blue collar jobs are seeming to be on the way out. And Alex, you had a great point in regards to that earlier.
Yeah, like ChatGPT can now write code, so a lot of tech people may be getting laid off. They like even who was it? BuzzFeed is what I read the other day. They laid off a bunch of people, and BuzzFeed's a news article website. They are switching to Chat GPT to write articles now and going all AI. And they laid off all their writers and journalists. And they're going to go that the stock jumped like I don't know, a couple 100% off of this.
I don't know how true that is.
A hundred. It's. I'll show you the article. It's crazy stuff.
I think it's very interesting. Artificial intelligence is going to transform every industry. We know blockchain is transforming everything as we speak. We're starting to see the beginning of it. I find it a little odd that they would replace their entire staff.
Well,
I don't know about all of them, but it was like 30 or something percent or 40% of their staff with our to do publishing and all that.
Well, and think about this too. So for example, if you have a large company and half your staff can be replaced by artificial intelligence, the overhead costs and your labor costs just drop significantly. This kind of the second part of that would.
I'm sorry, 12% in December it laid off, and they're looking at doing more.
Right. Well, and we are seeing companies like Tesla, and Amazon rethink traditional. It's not just going to affect one sector. It's going to affect blue collar and white collar.
Tesla has the humanoid coming out. It's a robot to do a human robot type aspect to do manual labor and stuff.
Right. So, I mean, you think about it, if you're going to replace truck drivers, and it's kind of funny about a friend of mine who's a negotiator for a big union. And I just asked him the question, and I said, hey, what's going to happen when almost all your workers are going to be replaced with artificial intelligence? And he just looked at me and said, you know what, Tim? I'm retiring at the end of the year anyways.
He goes, not my problem. Next generation's problem.
So, yeah.
I mean, another note on that AI thing, I think even in the political specter, recently a congressman out of Massachusetts delivered a speech to the House floor from that was fully generated by AI, that wasn't told beforehand that it was generated by AI until after. And I think that's just another example where speech writers in the political sector are also going to be not necessarily out of a job, but their job will either drastically change or it's just not going to exist anymore.
Right. I've played around with a couple of the different AIs, and my feeling towards them is they're okay. There's definitely a lot that's lacking in them that I don't think you'll ever fully be able to replace human intelligence with, and especially in our sector in finance, and especially in our sector, there needs to be oversight. And what people don't realize is someone sent me an article 2 days ago that the first artificial intelligence robot is starting to run investment models, right?
Mm-hmm.
I'm like, well, we've been doing that for at least 10 years. So this isn't anything new. Like your entire passive investment universe and most of your active investment universe was replaced by robots over 10 years ago. So it's just now that the public and retail investors are starting to
Get hold of it.
And
be able to use it. Yep, exactly. And I don't think that's funny because I don't know what the percentage is. Do you know what the percentage between institutional and retail investors?
In terms of what?
I don't know, capital efficiency or whatever. So you have a big part of the market is used to using AI and used to the algorithm, where retail is not, right? They can see it happen, but they don't, do you get what I'm trying to say?
I do. I think most retail, if you're at your Fidelity or Vanguard or even a lot of BlackRock stuff and others, it's already run by computers. And the other thing too that I don't think people understand on the investment side of things, like on the institutional side, the average institutional investor might have 20 to 25% of their investments allocated to um, you know, exposures to the market, let's say, cash, stocks, bonds, which asset allocation and traditional diversification for retail is, equities, fixed income, and which is also includes cash. Like that's 20% of what institutions do. Everything else is tangible, real estate, private equity, franchising, um, you know, development, farmland. Like those are the investments. Like that's how you build a portfolio. That's real diversification. And now you have to think, if you're watching the tea leaves, you now have to start diversifying across countries.
I would
And
agree.
the most retail investors, it doesn't matter what is there from an artificial intelligence perspective, they're just never going to get there because it comes
Well,
down to skill set.
Well, that and they don't have the same opportunities. We can't some retail can't get the same deals you can out of the country, right? It's going to be harder for retail to do trade in China or get Chinese stocks or whatever stock you want other country.
Or even different types of investments that you're not going to have available through a retail account with a TD Ameritrade or the former E-Trade platform. And
Or Robinhood or whatever.
right. And then it's at levels, right? So there are investments that most retail doesn't know they have access to, that they do have access to when they work with financial professionals. And then as you get up the ladder in terms of investment acumen and then investment net worth, that type of deal, then a whole new spectrum and a whole new world of investments opens up. And for anyone that's looking to build financial freedom and build wealth, wealthy people don't invest in the stock market. It's not an investment, it's a gamble. Wealthy people gamble in the stock market, they gamble in the market, but they don't invest in the market. It's a mentality thing.
Before we go too far off course on AI, because I know all three of us could probably sit and talk about it for hours. To get back to the layoffs, how long do we think that this is going to continue to happen? Do we think layoffs are going to continue to happen for the foreseeable future in every sector, in almost every industry?
I think 18 months, next 18 months, you're going to see it throughout the board, 12 to 18 months. Most of the brunt force is probably in the next 6 months is my guess, but by the summer, maybe fall.
It kind of feels like it's going to be front loaded a little bit. Right. But I think Alex Krieger, I think that sounds about right. That feels about right. So and that's the other thing too, that probably ties into layoffs for anyone out there that's listening. Know your options. If you have old 401ks, old IRA accounts, you have options if you get laid off. And obviously it's a major life event. So if something does happen, make sure you're sitting down with someone and talking about the changes that are happening and making sure that you have all of your money working for you to get you through the changes that you're going through. Right. And then it's for yourself and your family and your children and all that other good stuff. And one of the biggest problems we have in this country are, I would say, stale 401k accounts, where you have someone leave for another job and they leave an old 401k, which is really not being managed by anyone.
Yeah.
There are opportunities and big investment opportunities and options with that. So make sure you're staying on top of that.
Yeah. Well, let's start talking about crypto, and we've got some very interesting news coming out of crypto today in this past couple of weeks. So Alex.
So with kind of to tie a bunch of things in, our last video, we were talking about bail-ins, bank bail-ins and so forth, and the push of central bank digital currencies. Now, right now in Nigeria, the Central Bank of Nigeria is limiting to $40 cash withdraw a day, $200 max cash limit a week. So right now, a bunch of Nigerians and people over there are buying BTC to be able to actively trade and feed their families and live, really, right? Imagine being able to only pull out $40 a day and pay bills and do all that. So over there, their exchange rate for BTC now is 38K on their exchanges.
That applied to Ukraine too, right? Especially
Correct.
in the war.
Yep, Lebanon. I bet you Lebanon's going to be doing the same thing in the next couple of days. You're going to start noticing a bunch of people switching over and transitioning over from their natural fake money, as they call it.
Yeah.
Fiat, fake money. Yep. So it's interesting. That's why I kind of think we're towards the bottom of this of BTC and Ether. That doesn't mean there won't be a black swan event. Geopolitical, like we were talking, big with the layoffs happening. I think you're going to see a lot more people and companies realize what's happening and the devalue of the dollar.
And
Yeah.
I think the crypto markets it tied now into the traditional markets. We are now learning of not new, I shouldn't say, but now custodians are coming out and saying we can now trade physical assets or hold physical assets, hold stocks, hold bonds, hold mutual funds, and hold cryptocurrencies and digital assets in retirement and non-retirement accounts. So I think we're starting to see the first wave come through of the transition we've been talking about.
Correct. Yep. And I think, and personally, I think it's going, I think I was reading an article, 18 or 20% of Americans already own crypto and are up to date since COVID, pretty much, or maybe 14%. I see more third world countries getting on the train faster. You know what I mean? Realizing, hey, my purchasing power isn't going as much. I used to be able to get way more corn or whatever to feed my family than I am now. And they're going to be transitioning. Look at what El Salvador did.
I was reading an article yesterday which said that digital assets and crypto proved it's a hedge to fiat debasement and to central government policy.
Correct. The interesting thing that I want to see how it plays out is the stable coins. Like if they devalue the dollar, how is that going to play out on the stable coin market? Right.
Alex, can you quickly explain stablecoin for any of our viewers out there?
Stable coins is just it's a 1-to-1 backed dollar in the bank. So the major ones is USDT Tether, USDC is Circle, and that's the main one a lot of exchanges use. There's Gemini dollar is one of them, which is they have dollars backed in a bank account 1-to-1 of the amount of the coin that is printed.
Right. So
I'm curious.
Every dollar you put in, they hold $1 in reserves.
Correct.
Which is very, very similar to the insurance industry and their general account for their guarantees that they're guaranteeing.
It'll be interesting to see what happens to the stable coins as the US dollar loses its value and so forth.
I think that's everything that we had planned for today, correct?
Correct. Yes, sir.
Awesome. Well, everyone, on behalf of Twin Shores Financial, thank you all for tuning in. And if you enjoyed it and want to stay up to date on the markets, please tune in every other Thursday for all your financial information. Don't forget to like, share, and subscribe. And if you have any questions, please comment them down below. Tim, Alex, any last words?
No, enjoy the rest of the week, everyone. Thank you for
Exactly.
watching us. We appreciate your time.
Not your keys, not your coins.
Do your homework, invest wisely.
Thank you, everyone.